Hello everyone. Welcome to this final session on goods and service tax filings. In this session, we are going to learn about the refund process. So, GST refund process is a critical aspect of compliance that affects not only the taxpayers but also the government. So, in this session, we are going to learn about the different types of refunds under GST. Then we will see the eligibility criteria for claiming of refund and the step-by-step process of filing of refund application along with common issues and what are the best practices to claim the refunds. So before we proceed with this final session, let us quickly see what we did in our previous session. So in our previous session, we learned about the amendments and rectification in GSTR 1 and GSTR 3B return. We studied the various types of amendments that can be made in the GSTR 1 return like B2B invoices amendments, then debit notes, credit note amendments, export invoices amendments and related exempt or non-GST supplies amendments. Also, we learned that in GSTR 3B direct amendments are not allowed. Only adjustments through next returns can be done in GSTR 3B. Then we studied about the timelines within which amendments or rectifications can be done, that is till the November month's return or the filing of annual return, whichever is earlier. So now let us proceed with today's session. Let us see what is the refund process and what are the types, eligibility and filing of refund applications. So what is a GST refund? So a GST refund is a process where a taxpayer can claim back the excess taxes paid or unutilized input tax credit lying in his input tax credit ledger. So it ensures that the taxpayer's working capital is not blocked unnecessarily. So refunds can be claimed by filing form, that is RFD 01 through the GST portal. Refunds may arise due to reasons like excess taxes paid by the taxpayer or export of goods or services, that is with payment of GST or without payment of GST. Then accumulation of ITC due to inverted duty structure. Inverted duty structure is a scenario where the taxes on outward supplies are lower than the taxes paid on the inputs or purchases. For example, if the outward supplies or the final product attracts GST rate at the rate of 5%, whereas the inputs used to manufacture such product attracts the GST rate at the rate of 12%, then the differential 7% can be claimed as refund, and this scenario is known as the inverted duty structure. So next, the reason could be finalization of provisional assessment, then refund to UN bodies or embassies, and finally the refund on deemed exports. So these are the reasons for which an SSE can file a refund application and claim refund from the GST department. So let's take an example of refund on exports. So an exporter have two options to export the goods. One is with payment of tax and another is without payment of taxes, that is by opting LUT, that is letter of undertaking. So under the first scenario, that is with payment of taxes, the exporter has to pay the applicable GST on the exports and subsequently claim the refund. Whereas in the second scenario, that is without payment of taxes, the exporter does not pay any GST at the time of export and claim the refund of taxes that has been paid at the time of purchase for export. So let us take the first example, that is with payment of tax and refund of IGST. So Mr. Ram purchased goods from Mr. Lakshman for rupees 8 lakhs, on which GST paid by him is rupees 1,44,000. Further, he exported the goods for rupees 10 lakhs and paid tax, that is IGST, on such export rupees 1,80,000, that is 18% of rupees 10 lakhs. Further, he claims the refund of taxes paid to government, that is 1,80,000 rupees. So in this case, Mr. Ram will discharge his GST liability on export, that is rupees 1,80,000, and subsequently claim the refund of IGST. So he will pay the output liability of rupees 1,80,000 utilizing rupees 1,44,000 input tax credit that has been paid at the time of purchases, and rest rupees 36,000 in cash. And finally, he will claim the refund of total taxes that has been paid by him, that is rupees 1,80,000. Next, let us take an example of without payment of taxes, that is refund of accumulated ITC balance with LUT or bond. So Mr. Ram purchased goods from Mr. Lakshman for rupees 8 lakh, on which GST paid by him is rupees 1,44,000. And further, he exported the goods for rupees 10 lakhs and did not pay any taxes, that is no IGST on such export, and further claims the refund of tax paid to government, that is rupees 1,44,000. So in this case, Mr. Ram will not pay any GST at the time of export, and he will claim the refund of taxes paid at the time of purchase, that is the input tax credits lying in his account out of the purchases for export. So in this case, he will claim the refund of rupees 1,44,000. Next is the inverted duty structure. So this we have already discussed. Inverted duty structure is a scenario where the input tax rate is higher than the output tax rate, and the refunds of unutilized input tax credits can be claimed subject to certain exclusions like some goods or services. So let's take an example. Suppose we are a manufacturer and trader of computers. The rate on GST, for example, on computers is 12%, but the components that are required for a assembling of computer falls under 18% bracket. So if our output liability comes to rupees 10,000, whereas the taxes paid on purchase of inputs comes to rupees 15,000, then the differential 5,000 amount can be claimed as refund. So under the inverted duty structure, input tax is greater than output tax. Refund of unutilized input tax credit is allowed, and it excludes certain notified goods or services. So now let us understand with an example how the calculation for refund of input tax credits under the inverted duty structure is done. So XYZ supplier is engaged in supply of taxable goods. Given below are the details of turnover and applicable GST rates of the final products manufactured by the company. Input tax credits availed on inputs used in manufacture of each of the final product and GST rates applicable on the same are also given below. It has also been provided that product B is notified as a product in respect of which no refund of unutilized input tax credit shall be allowed under the said section. So we have product A and product B. The turnover is 6 lakhs and 5 lakhs respectively. GST rate on outward supply, that is on sale, is 5% each. Then input tax credit availed is 54,000 and 48,000 respectively, and the GST rate on inputs are 18% for each. So the final tax payable on inverted rated supply of product A is 6 lakhs into 5%, that is 30,000. Net ITC will be rupees 54,000 plus rupees 48,000, that comes to rupees 1,02,000. So net ITC availed during the relevant period needs to be considered irrespective of whether the input tax credit pertains to eligible inputs or ineligible inputs. Then we have adjusted turnover rupees 6 lakhs plus rupees 5 lakhs, that is 11 lakhs. So the turnover of inverted rated supply of product is rupees 6 lakhs. The maximum refund of amount that can be claimed will be calculated as rupees 6 lakhs, that is the inverted rated supply divided by rupees 11 lakh, that is the adjusted total turnover, into the total input tax credit, that is rupees 1 lakh 2000. This will be the maximum amount subject to the output liability, that is rupees 30,000. So the final amount comes to rupees 25,636 rupees. So what are the other types of refunds? Excess balance in cash ledger. It arises due to payment errors or excess challans paid by the taxpayer. Then excess payment of tax, for instance, wrong head selected such as CGST, SGST instead of IGST or vice versa. Then refund on account of finalization of provisional assessment, where the tax was paid provisionally but the final assessment outcome, the liability is lesser than what it was assessed. Then refund to UN bodies, embassies and notified persons. Special entities can claim GST refund on the inward supplies. And finally, the refund on deemed export. The supplier or recipient of deemed export can claim refund of taxes paid. So let us now see the eligibility criteria for claiming of refund. So as studied so far, we can claim the GST refund if we have paid excess tax or we have paid wrongly. We have exported goods or services with or without payment of IGST. Then we have accumulated ITC under inverted duty structure. Then we have balance in our electronic cash ledger and we are a UN agency or embassy. But there are certain conditions subject to which refund can be claimed. Such conditions includes filing of relevant returns, that is GSTR 1 and GSTR 3B. Then availability of matching credits, that is one-to-one correlation with GSTR 2B. Then submission of documentary evidences as required by the officers and claiming within the prescribed timeline, that is within 2 years from the relevant date. So let us now see the step-by-step filing process on the GST portal. So for filing of refund application, we have to first log into our GST portal using our login credentials. Then we have to navigate to services. Under services, we will find refunds, and under refunds, we have to choose the application for refund option. Then we have to select the type of refund, that is type of refunds will be like export or inverted duty or excess tax, or there will be certain more options from which we have to select. Then select the tax period. We have to select the month or quarter for which refund is sought. Then upload the supporting documents. We have to supporting documents like invoice details, then shipping bills, LUT, declarations, CA certificates, etc. Then data from GSTR 1 and GSTR 3B will auto populate in there. Then finally we have to submit the application RFD 01 using DSC or EBC, and finally an acknowledgement will be generated in RFD 02. Then refund processing workflow. In RFD 01, refund application is filed. RFD 02, acknowledgement will be generated. RFD 04 is a provisional refund, that is 90% of the total refund claimed. Then RFD 06 is the final refund order. And finally RFD 08 or 09 is the show cause notice or replies. Next, what are the common mistakes at the time of filing of refund application? Mismatch in GSTR 1 and GSTR 3B. So there is a turnover mismatch or the mismatch in taxes as per GSTR 1 and as per GSTR 3B. Then late filing of refund application, that is filing of RFD 01 after the prescribed time period, that is beyond 2 years. Then wrong document formats. Certain documents are required to be uploaded at the time of filing of RFD 01. Such Documents should be in proper format and as required by the portal. Then incomplete invoice or shipping data, incomplete records or deficiencies in the documents submitted may lead to denial of refund. Then no correlation with GSTR 2B, that is the refund claimed for inputs does not match with the ITC as per the GSTR 2B returns. So what are the best practices? Reconcile data monthly. So I have been emphasizing on monthly reconciliation since the very first session. So reconciliation of books and different returns like GSTR1, GSTR2B, GSTR3 is a must. Then maintain refund claim register. All the refund claim register must contain details like the refund application filing date, then the invoices for which refunds have been claimed, what all refunds have been granted and received, and so on. Then use correct HSN invoice details. The refund application filed by the taxpayer must contain correct HSN and invoice details. So the prescribed timeline of 2 years must be strictly adhered to, and use of DSC to avoid rejections. So DSC should be preferred over EBC in case of refund applications. Then to summarize, refunds include IGST on exports, ITC on inverted duty structure and excess taxes paid by the taxpayer. Then RFD01 is the application form to claim refund, and timely filing and proper documentation are the key for successful refund application. So that's it in this session, but we will certainly see a live demo of refund application, that is RFD01 in the GST portal, and afterwards we will conclude with the GST filings. So thank you very much. Let us go to the GST portal now. So here we have logged into our GST account. To create a refund application, we have to navigate to services. Under services we have refunds, and under refunds we have multiple options like application for refund, refund pre-application form, my saved filed applications, track application status, track status of invoice data to be shared with IceGate, and intimation on account of refund not received. So we will create a fresh refund application by using the application for refund option. Here we can see there are multiple options against which refund can be claimed, like input tax credit accumulated due to inverted tax structure, then export of goods or services without payment of tax, export of services with payment of tax, supplies made to SEZ or SEZ developer with payment of tax, then again supplies made to SEZ unit or SEZ developer without payment of tax, on account of refund by supplier of deemed exporter, on account of refund by recipient of deemed exporter, then excess payment of tax, excess balance in electronic cash ledger, then on account of assessment, enforcement, appeal, revision or any other order, taxes paid on intrastate supply which is subsequently held to be interstate supply and vice versa, that is in case of change in place of supply, then invert supplies of goods by canteen store department, and finally any other reasons that we have to specify. So let us select a option of excess balance in electronic cash ledger. Let us select this option and proceed with this. Create refund application. Here, balance available in cash ledger. If we have any cash balance or excess cash balance in our cash ledger, it will appear here. Then this is the refund claim, that is the amount of refund we want to claim against the head of. From the head of tax, interest, penalty, fee, others, we will have to fill up this. Then we have to select the bank account in which we want to get the refund. It will get automatically filled up, and we have to upload the supporting document here, and finally we will have to save and proceed to file the return. This way a refund application is filed with the GST portal. So that's it for the refund applications, and this brings us to the end of this session on goods and service tax filings. So thank you very much for your patient listening.